Our price went from 40p to 23p, and we thought that was a bit of a nightmare. Absolute blessing in disguise. We've just flatlined for about 4 years, doing all the right things, unloved, no appreciation, but then all of a sudden, retail guys get hold of it. We've gone from like 9% retail in London to probably 16-17%. The key to our success is really this team of mining expertise that we have in actually boots on the ground.
Hello and welcome to our viewers on Crux Investor and also to our listeners on Cruxcast, our podcast series. We're here today with Mike Hodgson. He's the CEO of Serabi Gold. They're a gold play in South America. We're going to talk to Mike about his track record in South America. We're going to talk about strategy of the business, where it's going, and some of his recent updates. If you want us to take a look at some of those topics, look in the description below, click on the timestamp, and that'll take you to that part of the video. And if I could ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And if you want to see more videos like this, click the notification bell. Hello, Mike. How are you?
Well, thank you.
Good to have you. And you're mostly traveling the world. Every time we ring the office, you're on a plane.
Yeah, I'm going again tomorrow. Toronto this time, yeah.
I heard. So why don't we kick off with a 1-minute summary for people who haven't heard the story before?
Sure. Well, 40,000 ounces high-grade gold production in the Tapajós region of northern Brazil, Pará state. It's a big artisanal gold field. We're the first operator in that part of the world, so we've got great local relationships. We've actually put a mine into production. It's taken a while. The company did it many years ago. The mine actually closed. We actually started up against a brownfield site. We're mining high-grade gold. And when I say high-grade, I mean 8 grams, which really I think sets us apart from the rest, which is people have got so used to 1-2 grams. We're 8. We're underground, high-grade, selective mining. And we've acquired about 18 months ago the Coringa asset, which is essentially a carbon copy of our current Palito operation. So we basically see 40, we've done it, worn the t-shirt, and we're going to put Coringa into production, make it 80. So we're growing organically, but certainly in a very controlled way.
Yeah. So thanks for that summary. I'm interested in this story because you guys have been around for a while, right? You've been in South America for a while. I'd love to sort of understand a little bit about the team's experience in mining in South America. What's everyone done? Let's start with that.
Right. Well, as I say, Brazil is a country that probably is very dominated by large, enormous surface deposits. So it's not. I won't pretend to say it's been easy.
Yeah.
We've actually had to address the fact that there aren't very small underground mines in Brazil. Therefore, there's a skill shortage. Right. I suppose we've cheated a little bit. We actually are next door to Peru and Bolivia, and we've got some very key people that have come from there. I was the COO of Orvana Minerals in Bolivia before this job, and I've spent much of my career working in the Cornish tin mines. So like it or not, I'm very specialised in small underground mines. And I worked for TVX before, which again on a small underground mine. I can't escape it, but clearly I'm probably quite moderately successful at it. So we built a team which involved key management in the mine, which came from Bolivia, and we brought over a Peruvian contractor to help us with the selective mining. We have our ore body at Palito and the ore body that will be developed and put into production at Coringa are high-grade, subvertical, narrow veins. Quality ounces is what it's all about. Controlling dilution is what it's all about.
Right. So who on the team's been focused on that previously?
Sorry,
apart from yourself, who else in the team's got that level of experience?
Well, on the board itself, there's a gentleman called Eduardo Roslot, an old colleague of mine, mining engineer, Chilean guy, and he's been very important in terms of actually helping us with our funding. Yeah. And the rest of the team actually in Brazil, we've got key Bolivian mine superintendents, Bolivian, and all the technical team are Bolivian. The key to our success is really this team of mining expertise that we have in actually boots on the ground. That's it. That works very well. The Peruvian contractor we've now actually nationalised. They're now all Brazilian paid and on the Brazilian payroll, which is a very important point because there's no real sort of problem in terms of these people working in Brazil language-wise, which certainly was something which concerned us at the very beginning. But just going back a step, probably people may or may not know that Serabi did put Palito into production in 2003. It started probably in the correct way, but a couple of reasons. Back in the 2000s in London, where the share company originally listed, there was, let's say, a lot of people in the stock perhaps shouldn't have been in the stock. They didn't really understand sort of junior mining, and I think the company did two things. One, it chased scale to try to meet shareholder expectation, but it also changed the mining method to try to act, because it was very difficult to find the right people for the job. So when we actually restarted this mine back in 2012, 13, we got the right team in, and the formula for success has been the mining.
Yeah.
I mean, I live by the, my saying always is, grade pays, tons cost. And
yeah, sure, absolutely. But you raise an interesting point there. There have been, and possibly still are, some people who've been in this a long time, long suffering. The share price has, been, I'll say flat for a couple of years, but it's recently picked up again. Right?
Yeah.
So if we look at that, I mean, you must be quite pleased.
Delighted. A little bit of brief history on that. It comes back to some of the people that I've been around with, like Eduardo Roslot, who's one of our Chilean directors. He was really instrumental in actually, back in 2012 when we wanted to reopen this mine, gold price was high, the markets were terrible, there was no money out there for exploration, there was no money for resource growth, there was only money for cash flow. Cash flow, and it was hard to find. Eduardo introduced us to the Majev investment, or the Fratelli as it's called, one of our biggest shareholders. And they, I mean, I've got to be very thankful for these guys. These guys put money in at risk where nobody else would. And they backed us.
And they're still there?
They're still there. They're a big shareholder. They basically went through 50% because they did want trading freedom, but frankly there was no one else coming in anyway, so that's where they were. So we reopened the mine very successfully, got up to 40,000 ounces pretty quickly, where we've now been for about 3 years. They underwrote the entire financing, took all the risk. The problem with that was our stock was incredibly tightly held. We had no retail, and but I think at the end of the day,
well, not no retail, not enough retail.
Very little retail,
right,
very little.
okay.
So there's no liquidity, and that was that. Now we kind of, everything was great about our company except the capital structure in a way.
Right.
We thought, well, we'll fix this as time goes on.
What have you done about that? Because I know it's Greenstone now in there.
Okay, so finally, so they were ticking along quite nicely, doing 40,000 ounces, operationally terrific, corporately still with some problems. But back in 2017, we actually acquired the Coringa asset. Now, the Coringa asset was from a company called Anfield, which has now been rolled into Equinox, one of Ross Beattie's companies. Before that, it was actually in the hands of a company called Magellan. And we've been trying to buy this asset for a long time because it's a carbon copy of Palito. Right. So, we've been mining our Palito for a number of years. We know we've got all the relationships, as I say, in the region. We've got the, we certainly have the methodology, the formula. It's obvious that. But
before we get stuck into the project level, because I do want to come on to that and cover that. I just want to stay with the shareholder component and what the thinking is.
Yeah, well, the buying of Coringa actually, it was the catalyst to do another capital raise, because we bought Coringa for $22 million. And we funded 5 out of cash flow, but then we obviously got to fund another 5, and then the final payment, $22 million in total.
Right.
So raising of that money, we did a capital raise in March 2018. At that point, Greenstone came on board, and also River and Mercantile in London.
And just
as well.
explain to people who don't know Greenstone, because obviously they're pretty well known in the industry. But
Greenstone are a private equity fund, London-based. They're invested in probably 10 or so stories, I would say, pretty much multi-commodity. All over the world.
Very technical
team, strong technical team. They work with us very well. They've obviously, like Clive and myself, for a long time. They've been trying to get into Serabi for a long time, and they've been looking for the opportunity. And obviously, acquiring Coringa was the opportunity for them to come in.
I think especially they know what they like, and they're very selective. And I've definitely shown them deals over the years. It's a very strong team, so I think that's quite a good.
So they came in and. Around the edges in that financing in April 2018, a group called City Financial came in, and also we had a Swiss family office that was still actually in the story. Now this year, obviously we know that City Financial ran into some problems, and the Swiss family office also wanted to liquidate their position, which at the time was that wasn't welcome news. So 6% of our stock was just basically dumped on the market in, let's say, the spring this year. And our price went from 40p to 23p. And we thought that was a bit of a nightmare. Absolute blessing in disguise. Because that stock just got picked up by retail guys for once, and I think you've seen our graph of our liquidity.
Very good.
It's amazing. I mean, we've just flatlined for about 4 years. doing all the right things, but not getting any unloved, no appreciation, blah, blah, blah. And then, but then all of a sudden, retail guys get hold of it. We've gone from like 9% retail in London to probably 16, 17%. And it's, happy days.
It helps. And when it is really important for new people coming in to look at the structure, the corporate structure of a business before they invest, because I think we've talked in the past about the paralysis that can come with too much institutional, either one individual or multiple institutions who sit and hold.
Well, Greenstone, that financing in 2018 didn't really do a lot for our liquidity. It probably, I like to use this expression, it gave us some kind of democracy at least.
What does that mean?
These days, I don't know.
Right, true.
But it's at least we had like 2 big shareholders on the board now, so there was a kind of a natural balance, I suppose.
Right. Okay. So
and obviously with Ribbon Motel, we've got 3 shareholders now over 10%.
Yeah.
And 2 of them sit on the board with board representation. So there was a bit more of a democracy there. But again, and obviously Greenstone came down from Fratelli came down from 52 to 32%. Yeah. So that was good, but as I say, there was still, that raise didn't bring in liquidity really, but obviously the selling of this stock in the summer did.
So you now recognise the importance of retail family office and high net worth.
We have tried so much to get retail into this company, and all the time, every time, it's just been institutions coming in. Well, we've only done 2 raises, so it's not as if we've been raising.
Okay, so now you've got a bit of retail in there.
Yeah.
I would like to spend some time with you to understand what's going on up here in terms of the business plan, the strategy, how you're going to deliver it, where you're going, and who's going to actually deliver that. So describe, if you can, what is the plan? Okay,
right.
We know where you've come from. You've done a great job describing that. So today, you've got a couple of assets, so you've got to deliver those.
Right. Well, technically, on the current operation, Polito basically is one plant, which is plant constrained, which is actually pretty unusual these days, because most plants are actually, most companies are mine constrained. Yeah. Now the good thing about being plant constrained is it brings discipline. You're always treating it with the highest grade possible. You don't throw.
And again, just be clear with people what you mean by that.
Well, grade is king. Right. So of course we've now had a head grade of around 8 grams forever. Nice. So that's what we work with. And being plant constrained means we're not just throwing tons at the plant, we're actually throwing quality ounces at the plant. That's the important thing. Polito's in very steady state of production, 2 ore bodies feeding a central plant, 500 tons per day, between 7 and 8 grams per ton. That's what we do. And we're kind of limited at that at the moment. We don't really want to expand the plant because our ore bodies, as you can see from the presentation, they are high-grade narrow veins. So what our business is to actually mine these veins as well as we possibly can, minimizing dilution as much as we can, to get quality out of the mine and then basically through the plant. Inevitably, even doing this by the best possible way we can, we still get some dilution into the system. Over the last 18 months, we've actually been testing ore sorting. Now, I know this is a big buzzword these days. I've just come back from Beaver Creek, and I was last year. It's all the rage. Ore sorting. It's going to solve all our problems. It won't solve all our problems, but it will certainly help a lot. Now,
so what's it going to help with?
Well, as you can see from our ore bodies, we have our ore bodies are they are ore and waste. You can see here from some of the ones behind me. You probably can't see it too well, but that is the ore body. It is sulfides. The gold is inside the sulfides, and outside that is just pure waste granite. So the ore sorter is actually a waste remover. Right. It sorts on either color or on density, and the difference is really, really good. So the intention is to pass our, let's say, our lower grade material through the ore sorter, and that will screen out waste, and it'll liberate. First of all, it'll take waste out of the system. Right. That will save us about $1 million a year in process cost. But more importantly, it actually liberates about 20% of space in the plant. So we can actually add more high-grade ore, and we can make our little plant go from 40,000 ounces per year to 50,000 ounces per year.
Very low cost, I'm presuming.
Virtually no cost. That almost goes straight to the bottom line. So from today, we're a 40,000 ounce a year operation with, probably making about $4 or $5 million a year.
Yeah.
Okay, it's positive cash flow, but it's not exactly pulling
Okay.
penny trees.
So,
We put in the ore sorter, and we're beginning to sort of really make some serious
right. So an ore sorter, it doesn't cost a lot, comes out of cash flow.
$1 million.
So no dilution and improve efficiencies and productivity.
That's the first thing that we're doing at Polito.
Got it.
Our other new asset, which we are developing, that is actually build ready. We have when we bought that asset, Anfield did a terrific amount of work there. They spent a lot of money. Thank you. And they built a camp. They bought a process plant. They bought all the toys, a lot of the mining equipment. They did a lot of work. They did the studies, which was great. But I think people ask me all the time, why did Equinox or Anfield, which became Equinox, why did they sell the asset?
Sells the good stuff, right? Yeah.
Scale. Too small for them, really. I think at the time they probably thought the asset was going to be a lot bigger and was going to be their platform to build a gold mining company in Brazil. And they were certainly looking for something a lot bigger than perhaps the Coringa could be. So at the end of it, although it's a very tiny deposit, it doesn't really work for anybody else except us. We're in the Tapajos, we're the only hard rock producer. Coringa's 200 kilometres down the road from Polito. There's little point two companies having two 50,000 ounce deposits in mines, let's say, in the same region where there's very little else.
Right.
So they belong in the same stable, there's no doubt. So the marriage occurred, we bought the asset. So we're now working our way through the permitting process. We've just submitted our new environmental impact assessment or statement yesterday, in fact. And we should get a public hearing on in around, well, after that's been protocoled and approved, which hopefully will take about less than a month. We will get the public hearing when we actually go to the local community and hopefully get approval. And I think because we have been in the region for, let's say, 10 years with the same authorities, we're not exactly the new kids on the block.
You've got a relationship,
exactly,
a track record,
exactly.
So just on that, so we're starting to build a picture of the types of facilities, mines, operations that you are comfortable with, and they're similar in profile.
Very similar. I don't think you can actually have a deposit more similar to Polito.
That's great. And so I did mean to ask, in terms of the sorter, what's the timing of that, and more importantly, what's the timing of when the benefits of that start flowing through?
The sorter has taken a while to get, but it's now at site. It's being all the infrastructure around it's now being fabricated and installed. We will switch it on probably in November, and we hope for it to be doing its job in January.
Okay, so imminently it will start to contribute towards the bottom line.
Yeah, we think this year, we're great. We're going on guidance. We're about to close Q3. It's been just the same as Q1 and Q2. It's another 10,000 ounce quarter. So we're bang on guidance to do our 40,000 for the year. And I think next year we'll hopefully be making a hole in 50,000 because of the sorter.
Okay, so that's going to hit the bottom line from Q1 next year.
That's right.
Okay, that's quite nice.
Yep, it will. And we're sitting there today, 40,000 ounces with us, say, making about, as I say, like $4 or $5 million. That's going to go up very handsomely with the ore sorter. 10,000 ounces at very little incremental cost. Just a little bit more process cost.
So something to look forward to end of Q1, whenever.
Well, the Q1 numbers, we hopefully will get some good numbers Q1 going forward.
So let's talk about so now we're going to talk about if we can Coringa proper, because again, meets the profile. It's a similar looking system, so more of the same. So you know what you're about. So tell us about what's happening at
Repeat
Coringa,
the formula completely.
A few things going on. Obviously, you made a few announcements recently.
Yeah. I mean, Coringa, obviously, our big sort of news this recently was the publication of a PEA, which was great. It really just demonstrated what we absolutely expected. It's going to be
you made a few tweaks to it.
Yeah, it's going to be a 40,000 ounce deposit. When it gets to its full fighting weight, it's going to be another 40,000 ounces. The process plant is there. A little different to Polito. This process plant was bought from Troy's Andarinas mine in Pará. It's actually much bigger, so there's no capacity issue with this plant. But that said, we are one of the first things we're going to do at Coringa. I'll go back a step first. It's a very similar deposit, say, to Polito. We are just working our way through the permitting process at the moment. One thing that we do have already is we have the mining license. Which is something Equinox never got to, so we can start the mine tomorrow, subject to funding. We're going to start going underground. Why is this important? It's important because we want to, first of all, we want to test almost establish the continuity, because Coringa is a greenfield site. It's drill holes. So first of all, we actually want to establish that continuity. Secondly, the indications are in a lot of the drill holes that actually the widths at Coringa are probably a little better than at Palito, and certainly I think there's an opportunity to maybe semi-mechanize this deposit, which would be great for cost per ounce. And thirdly, we want to take a nice big bulk sample, because Coringa is, say, 200 kilometers away from Palito.
Yeah.
We will truck that bulk sample up to our ore sorter at Palito,
Yeah.
and we will actually run it through and see how it performs. I would suspect that the ore sorting is going to work very well, and therefore, although we don't need the ore sorter from a capacity issue at Coringa,
Yeah.
why process granite? Why not
Absolutely.
put an ore sorter in there? And again, it's all about ounces. It's grade.
Right.
Get that grade up as high as we can, and get the ounces from processing as little material as possible.
So again, I mean, what's the timing on all of this in terms of
Well,
impact?
we want to actually start the underground development in let's say before the end of the year, certainly Q1, and get into that. So we can start the mine. What we cannot start at Coringa yet is the process plant and the construction. We've got to work our way through the process. Now that's why the EIA has gone in.
Yeah.
We'll get the approved. We hopefully will get what's called the preliminary license by the end of the year. That is basically the environmental impact assessment, followed by the positive public hearing by the end of the year. If that all happens, that'll be great. Then we can actually launch into what's called the LI, which is the construction license. We'll then bring in a company like an engineering company to come and do the basic engineering, which is basically the design work for the erection of the process plant. That will probably take around 6 months. So we would like to think we've got the construction license by early Q3 next year.
Right.
Which means then we can start building. We can
Construction towards the end of next year is what.
Well, I'd like to think we'll start, probably August time. Yes, we'll be starting to build. And having just done it at Palito,
Yeah.
we pretty much know.
You're talking to the same departments and government bodies.
Completely.
So
The same
these
guys
are
that are giving.
established relationships. You've got a track record. So you expect those sorts of timings based on what you've previously experienced.
Exactly. And I say the fact these are the guys that are giving us our annual licenses and gave us all of this for Palito 5 years ago. We're just doing it again. So they're very comfortable with us as being the only game in town, really. So it's good. So we would expect, but the good thing about, if we do start the mine first, to actually, let's say, assess, maybe improve the mining, optimize the mine plan by this underground development, and also maybe optimize the flow sheet by adding in an ore sorter.
Yeah.
We're just going to improve those PEA numbers even more. And the good thing about that is, I think people will note that in the PEA, we're talking about a capex number of $25 million. There's 20% contingency in that as well. And let's face it, one thing that that study was completely based on Palito. So the one thing we have 100% confidence in is costs.
Yeah, it's true, but I'd say you more than most, because most PEAs have a variance of 30%, plus or minus 30%. But our PEA is
right?
You've based it on what you've done previously.
Exactly. So
I thought I will buy that.
Well, I thought the consultants were being rather penal, actually, to be honest. I said, look, 20% contingency on costs on a mine that's just up the road that's identical to the one we're going to do. Yeah. So we're pretty confident that the 25 million we can chip into that, and there's also the all-in sustaining cost is coming in at about 850, and there's 20% contingency on that. Yeah. So we're looking forward to Coringa really bringing our costs down.
That's because most of your G&A is staying over at Palito,
it's all at Palito. That's why it's loaded. Yeah.
Right. So it's kind of, but the blended,
950, 900, 950.
Again, a nice number. Is there much you can do about that? I know you've got various fixed costs which you can't affect, but what are the? You've already talked about some of the things you're doing. So
the gains are basically if we can actually get some mechanised mining in there. The gains are going to be will an ore sorter work at Coringa too. These are the real nice little gains.
Is there a number you're chasing?
I think it'd be pretty tough to do blended underground mining much less than 900, maybe high 800s, but I think less than that. Okay, that's a hell of a stretch. Yeah, but I think 900 is fine for us.
Happy with that.
That's going to throw off a nice bit of cash.
So we've got three locations. What's that combined number look like? You're heading up towards a reasonable size production.
Coringa with Palito, they'll both be doing about 40,000 ounces each. Now, as well as that, the other thing that we've been doing is basically our mine site exploration in and around the Palito and Sao Chico ore bodies. One of the use of proceeds of the capital raise that we did in 2018 when Greenstone came on board was we flew an airborne geophysical survey, which is like, over the whole tenement, 40,000 hectares. Obviously that wasn't cheap, but the results it threw off were great. I mean, the thing lit up like a Christmas tree. Again, what we're looking for are these sulfides, which show up with airborne geophysics very well.
I saw those.
And we have Garimpos, artisanal mines, all in our property. They're not a problem. People think, "Oh, Garimperos, that's awful." No, they're not. They only mine that top 10 meters and they go. So they're exploration tools. They're great. So the combination of those and anomalies, etc., are really important. We use the airborne geophysics as a sort of high level filter, and then wherever we've got anomalies, we go on the ground. We do follow up ground geophysics and geochemistry and just basically this risk reduction before we actually drill. And we've actually got some fabulous anomalies both in geochemistry and ground geophysics in and around Sao Chico, which is our satellite ore body.
Yeah.
And certainly we are now drilling at Sao Chico in the immediate mine site area looking for strike extensions, which is going very well. And then we're going to move on to these discovery drill programs on these anomalies, which are only 3 to 4 kilometers away from the actual Sao Chico deposit itself. So it's a really simple sort of, we can turn exploration success into production growth very quickly, particularly at Sao Chico. So the third part of our strategy is continue Palito as it is, add the ore sorter, develop Coringa advance the permitting and actually get underground at the same time. And finally, on the organic growth, it's mine site exploration and maybe a little bit more in and around our current producing assets, Palito and Sao Chico. So all in all, base case 80,000 ounces. We think we can, with a bit of exploration success in and around our backyards, we can get to 100,000 ounces in the next sort of
that's the
2 to
magic
3
number,
years.
isn't it?
It is, but it frustrates me a little bit because I think the most important thing is cash flow. And this free cash flow rather than everyone's obsessed with 100,000 ounces. Well, it's not very useful.
It's more an indicator of scale.
It is.
An opportunity. I think the picture you painted today is an interesting one in the sense that the type of structures that you're after and the types of projects that you are comfortable with and have knowledge of developing. Got to get Coringa going. Yes. But it also says potentially future M&A is we know what we're looking for. We're very, very specific. Is there much, I know you've got the organic stuff, is there much M&A thinking going on?
I just think we recognise that we're not ready for that yet. I think at 40,000 ounces it's hard. You really haven't got the currency. And we've got a project to build already. So that's where our focus lies. I think once we've got a Coringa permitted and we've got the funding in place and we're building it and we're really on our way to 80,000 ounces, 90, I think at that point we've probably got the firepower to have some serious conversations. And, obviously you alluded to, our costs at the end of the day, it's underground mining. It's not the cheapest mining on the planet. Open pit brings that. So, I would like to think our next acquisition would be, if we do one, or merger or however it be, it's a blend of underground, high grade, with some scale to get our costs down.
Is there much of that in Brazil?
Probably more, yes, there's more of that than there is the underground, for certainly, because we're kind of, I think we're the best, this is rather arrogant to say, but we're the best small underground miner in Brazil.
No, see, I'm a buyer of that, but then there's a sort of
but we won't do a deal for the sake of doing a deal.
Well, that's what I mean, because there's obviously dilution in that. It's a new type of mining for you,
it's got to work
and there's there's many carcasses on the side of the road.
Many
in Brazil. So
step
forward with caution.
Our ex-chairman always says to me, sometimes, Mike, the best deals you do are the ones you don't do.
Yeah,
and
true. And money in your back pocket. But I like the fact, I like the kind of sweating your own assets with this organic growth.
Yeah.
If you're in an area prolific and well known, then why not?
I really do feel that the Tapajós has seen 30 million ounces of artisanal gold mined. Now, there's been no systematic exploration in this part of Brazil, which scares a lot of people off. But for us, it's a blank canvas.
Yeah.
And I really do think the ore sorting and our approach is going to be a bit of a paradigm shift to this part of the world. And we don't market ourselves as and this is really important from the permitting aspect, we do not market ourselves as a Brazilian mining company. We market ourselves as a para mining company, because Brazil is a collection of 26 states. And the state government rules over federal government big time. You're not going to solve any problems in Brasilia. It's all in Belém, the state capital. And again, we're in Palito. We're going to try to develop Coringa using that relationship. And I think the Tapajós is a great place to be. And I think we could stay here developing assets forever and a day.
So let's talk about the market. Obviously, you're a producer, which is great. You're seeing the benefits of the
gold price in gold price is amazing. Great.
Explorers and developers, they're not seeing it as well. Most of them aren't seeing it. You are, which is great news for the bottom line. A bit more free cash flow, imagine.
Yeah.
But you've got things to spend that on.
Well, yeah, we always have. We're saving as much cash at the moment. Our war chest is obviously. We have a final payment to actually fully acquire Coringa at the end of the year.
Of course.
We've just got the cash. We've basically got that in the bank, which is good. So we're just trying to build as much as cash as we possibly can for the end of the year, and then so really make sure Coringa is 100% ours, which it will be, and then we drive forward.
So that's good. So you've got the cash to acquire that asset. You've got incremental free cash flowing at the moment with gold as it is today, and long may that continue. Is that enough to allow you to, that new free cash flow allow you to do the things that you want to do, certainly around organic, for instance? Or is that?
It'll be tight. It all depends on where the gold price is going to be. I think wanting to start, I look at Coringa and, we've got a great relationship with Sprott Asset Lending. They're one of the few banks, again, the only equity raises we've done the last sort of 5-6 years have been the equity raise to build Coringa, and the one back in 2012, and the one we just did in 2018 to basically acquire. The original raising was to do to acquire put Palito back into production, and obviously the one we did last year to actually get Coringa. In the meantime, we've just taken on some debt, and initially that debt was quite. So
is this Sprott debt?
This is Sprott debt.
Right, okay.
Sprott Asset Lending
You're
in
paying
Toronto.
your bills. It's all good.
Well, we basically borrowed 8 and we paid 8 back out of Cashflow.
Right.
They thought we were straight. You guys are legends. I mean, no one pays cash.
Well, that's their model. Lend the cash. If you're
most people do an equity raise to settle, and we didn't. We did the Cashflow. So we earned a huge amount of trust with these guys, and they are absolutely ready and waiting when we're ready, permitted with Coringa to do a lot of that with debt.
Yeah, for sure. Okay. So again, it sounds like you know what you're doing with regards to your cash position at the moment, obviously with the acquisition and the debt and so forth. So maybe that's one we can pick up on the next update when you've delivered a few of these things, because I guess you'll be in a position to know where you're at and what you want to do. But just on this market condition at the moment, have you got any views as to, is it going to sustain? Do you have an opinion?
Well, we had a board meeting today, and we all went around the table and had a different view on absolutely everything.
Right. Who knows?
Do you?
Well, no, absolutely not. But I've heard some really quite strange $3,000 type dollar numbers being put out there. I mean, obviously that sells.
I just went to Beaver Creek, obviously, the Precious Metals Summit, and obviously it was a good time to be there. We're all obviously gold bulls. Not much point going there.
That's out of necessity, isn't it?
Yeah, well, it is. But obviously 85% of our costs are in reais. So for once, we've got the double whammy here.
You've done
we've got the gold price growing and 6,300 reais an ounce. I mean, a year and a half ago it was like just over 3 and a bit. So we are. There always used to be this kind of natural hedge between the Brazilian real. When gold strengthened, the real was weakening, or vice versa. We never really got the double lift. But now we've.
Well, I think a lot of people are getting that with the slight strength.
Record levels in Australia, record levels in Canada. All the resource-based economies are actually getting this. Yeah.
But it's a question of how long it lasts.
at the end of the day, you know, you look at, you know, this well, I suppose the macroeconomics, you know, China and the US, and you know, and all that. It probably bodes quite well for gold with all this uncertainty, I think. But you know, people with much better pay grades than I have got it pathetically wrong. So
yeah, always, always.
So I think I'm just, well,
thought I'd ask.
We remain ever hopeful. Well, that's probably why, you know, well, the timing is good. I mean, we say our share price has gone up 3 times, and the market's there at the moment. So I hope it's going to be there when we finally need it.
Right.
You know.
It's been a good chat, good introduction, because we haven't spoken before. Our listeners and subscribers have not heard the story before.
Okay.
I know you've been around. I wanted to speak to you because I like the kind of robust, relentless, can-do attitude of the business, and the share price has been doing what it's done for the last few years, but it's on the move.
Yep.
You're doing all the right things, it seems to me, and I want to, you know, see that you continue to deliver what you say you're going to. Do you want to leave with maybe a few reasons why new investors should be looking at Serabi now?
Well, certainly, I think we've now got a record. Well, there's liquidity. You can get stock now, which is great.
Yeah.
For a long time, you couldn't.
I've heard that.
So I think that's a plus, and we're certainly there's a lot more steam in this price, certainly. And again, you know, I think the economics are all. We've got a real great economic tailwind at the moment. We're going to meet guidance certainly, and next year it's going to get a little bit better. So I think if the economics are with us, we're going to have a better year.
Yeah, okay, brilliant. Thank you very much.
Thank you.
Appreciate the time.
Thank you.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.